What was that?
Perfect. You want to be that guy?
Good morning, DCTV. I have a phone call. Gonna hang that up. I'm taking over the channel. Nobody else is here. It's just yours truly, B. Smith. No, just kidding. Guys, welcome to DCTV. I can't do this show without yours truly, as well as Jaime, Brandon, Coach Tamp, and look, there's Greg. Guys,
good morning.
What's going on? So real quick, I wanted to just cover some things that we're going to be discussing today, and it is the great insolvency. Guys, there is just more fear going on. We're seeing stocks that are related to this drop off as well. GBTC, Grayscale, MicroStrategy also continuing to slump on their bonds that are tanking right now as well. We'll get into that topic, as well as who's next in who's the next domino to fall as far as insolvency is concerned in the FTX wake. And then we're also going to be talking about a few other things as well. I'm checking in on futures. The S&P is down about 1/3%. The Dow's down marginally. It's basically flat. NASDAQ is down 0.5%. WTI crude is actually below $80 a barrel. Been a while since we've seen that. And then we're looking at Bitcoin, and that is down quite a lot this morning. It's down 2.5%, or 414 points. It's sitting at $16,164 per Bitcoin. How are we feeling, guys?
Frosty. Feeling frosty.
Definitely frosty.
It's quite chilly. It's quite chilly.
Yes, and we're seeing the consolidation in near the bottom at this moment of the price range where we've been at for the last few months now. Holding steady, but you're right. There's a lot to come, and this week it seems to be a pivotal one because a fairly large in one of the godparents of crypto industry may be at stake at the moment, but we'll expand into that.
Yeah. So this is your 3-day Bitcoin chart, Jaime. Anything really jumping out at you, or is it just more of the same?
Here, let me show you. It's more of the same in terms of where we're headed. So I'll share this screen right now where we're at. Boom. And are you able to see this at this moment?
Yep.
All right. Yep. So this is the general, what we've been stating with Don Fran, Tamp, and all of us in terms of our conversations. We are where the chart shows that we are. In other words, what we've been looking at is this monthly level to tap it as confirmation of bottom, or it's a very strong support. This 13,800. We just didn't know. I'm of the philosophy of show me the charts and I'll tell you the news. Mm-hmm. I just had no clue how we would get to 13,800 range, right, all the way down to 10,000 range. Well, goddamn.
Here it is.
Yeah, but so Jaime.
Yes, sir.
Nothing simple was going to get us to 13.8. So why is everybody surprised? Is it just because it was FTX, or is it because of what was going on? Right?
Yes.
Somebody had to fall in order for this to happen, to reach these levels. So
absolutely, and that's so. Just so everyone has an idea of Mt. Gox, for all of you that have been in crypto for years, back in 2015 when it melted down, that was 70% of the crypto market. That's what Mt. Gox represented. FTX only represents 10% of the crypto market. The problem with FTX is that they sucked in politicians, they sucked in VCs, they sucked in even Mr. Wonderful. I mean, they sucked in pretty much every financial institution out there, not just in the States, but globally. So their meltdown is quite significant because it triggered all this that we're witnessing, and it's also triggering this next domino that we're about to speak about. When this occurs, that would be a confirmation of, okay, here's the next large domino. The danger here, though, is the fact that now legislation will be pushed, and it's legislation that was actually was drafted with SBF's help, FTX's, the old CEO of FTX, his help. And it was molding him as an institution to pretty much dominate the crypto industry. What the world is not going to understand or realize is the fact that he did fractional reserves in crypto. And that's completely opposite to what Bitcoin stands for, which is your own value and no inflation at all. It's deflationary. If you have it in your wallet, it is yours, nobody else's. You cannot or should not start taking loans or inflating the value of it through trading or even the futures, like so many of these FTX did and so many others are doing. So yes, Greg, it's pretty significant what is going to occur, and this is where the wipeout and legislation would be rushed. Hopefully it's not legislation that pretty much would bring the industry to its knees. Not Bitcoin, by the way. I'm referring to everything except Bitcoin.
So what do you see? Let's say legislation gets passed, let's say February, right?
Mm-hmm.
What do you see? What do you forecast the market is going to do once legislation is passed? Is Bitcoin going to rise, or do you think it's going to fall, or
It's
do
gonna
you
rise.
think it depends on what the legislation actually does, right?
No matter what legislation does, Greg, no matter what, because all this legislation, if you pay attention to what's happening, they're going after crypto, everything except for Bitcoin. You'll notice that they're leaving Bitcoin aside. It's almost as if it's its own thing. So when that clarity, that regulation comes out to the world, it is going to show that Bitcoin is its own thing, and it's the hardest asset on the planet. There should be no fractional reserves or fractional futures or contracts or pink slips against it.
Or middleman.
Or a middleman, exactly, which is what FTX was trying to accomplish and so many others that have failed. So legislation, good or bad, is going to bring one thing: clarity. Once you understand where we stand legally, everyone's going to start moving their chess pieces to either find loopholes or find a way through. But Bitcoin remains the hardest asset on the planet, even harder than gold. So I think that's the moment of the world understanding what is Bitcoin and why we should have it as a hedge against the global fractional reserve system and money printing and inflation and everything else that's going to kill the economies globally.
I like Lord Fenrir's response to this. Regulation gives the optic of stability. He's 100% dead on.
Yes, absolutely. But assets are assets, and if Bitcoin is the hardest asset out there, it's going to stand on its own. It's going to go cut past all this illusion that everyone thinks is solid, but it's just paper printed by governments.
And regulation can't really stop Bitcoin at this point, right? I mean,
No.
It's kind of like what we've talked about in the past about it just being like the internet. Like, good luck stopping it.
Correct.
The other cryptocurrencies that are out there that aren't Bitcoin, there is that possibility, especially because if there's any kind of centralization attached to it. But Bitcoin is kind of just stands alone by itself. I mean, that's like trying to outlaw the dollar, I would imagine.
Yes, or the internet itself. Even the
Right.
government uses the internet.
Yeah.
And literally, Bitcoin is the protocol, peer-to-peer transfer of assets, money itself. That's it. It's a protocol. So how do you shut down a protocol that's decentralized globally?
Right. Good stuff. All right. So moving on, appreciate that the questions, Greg. Those are actually some really good ones. Let us know in the comments where you guys are watching from. I also put in our DCTV YouTube chat interesting poll that I want you guys to take a look at as well. I actually ended up asking who's the next to fall insolvent, meaning the next domino. I put Grayscale, GBTC, Crypto.com, Coinbase, and Kraken. You guys are responding to that right now. I spelled Kraken wrong. I just noticed that. But you guys know what I'm getting at. So make sure you're putting the votes in there. Let us know where you guys are watching from this morning. We certainly would appreciate what corner of the world you guys are taking notice of us. But getting into the WTF news today, it's not happy. It's not happy news. But I have an interesting follow-up question to this. So we have this fellow right here. The White Ranger, unfortunately, has passed away over the weekend. He did end up committing suicide, unfortunately, as well. And it just kind of like got me feeling nostalgic a little bit about like, man, like I remember being like, I watched Power Rangers all the damn time, all the movies. I was like real big into like Teenage Mutant Ninja Turtles when I was a kid too. And it's just a super sad story. So Walter Jones, who played the Black Ranger, tells TMZ that he was an inspiration to so many. His presence will be dearly missed. It's so sad to lose another member of our Ranger family. This was Jason David Frank, if you guys aren't familiar with who that was. I don't know if I said his name. He played Tommy Oliver and was the White Ranger in the original Power Rangers. He died suddenly of suicide. It's just pretty tragic.
For sure.
Yeah, situations like this. I mean, and I'm sure us as humans, you think of every possibility out there, and the fact that what gets you to the point where you would leave loved ones or even children of your own. You know, I think that's one of the big breaks, or that keeps you level headed.
Yeah.
Like, no, you know what? If I'm going to die, I might as well die fighting, not stepping aside and let the train of life railroad the rest, of your family. I think that's one of the things that keeps people in line. But then you have like Robin Williams and now him.
Mm-hmm.
It makes you wonder, okay, where is the... It's really a hard subject.
Yeah, it is. And if you're
really
if you're
is.
contemplating this, don't do this. Don't do this.
Yeah.
Don't leave your mess for everybody else to clean up, man. Just get some help. There's lots of resources out there, but don't do this.
Yeah.
Yeah. And also check on your friends too. Like everybody, it's a really good idea on a daily basis to have intentional reach outs to your friends where you're just letting people know that you care about them and you're thinking about them. And, that helps build gratitude within you as well. And that's one huge way to fight a lot of those like negative thoughts. It's focusing on the things that you are grateful for, because everyone has a ton of stuff to be grateful for. It's just a matter of bringing it into focus. So practice that kind of mindfulness and make sure people know you care about them.
Church here made mention, says it's really surprising. I would not have expected that from him. And that's the case for a lot of situations like this. So that's why, I'm with Brandon. Just reach out to him. You guys never know what battles people are fighting every day. So
I think the worst crisis right now for suicide is definitely the veteran side, right? All these, it's awesome, all the medical advances and whatnot that we have in today's society, right? But if you go back to the battlefield now, instead of dying on the battlefield, they're coming back, amputees and disabled, and so many of them just from their experiences don't know how to cope with it. So there are many avenues to get help. And I can tell any of my brother or sister from the military, if you ever need anything, all you got to do is pick up the phone. I'll be there for you.
Well said, Greg.
Yeah. They also the National Suicide Helpline is now just like there's 911, there's now 988. So 988 is now the dedicated suicide prevention hotline. So if you know anyone who's really seriously at that breaking point, 988 is the number.
Thank you.
Perfect. That's actually in the DCTV chat as well. But wanted to address that. So, most of the time we put some fun stuff up here, but I was like, man, that kind of like really, I don't want to say hit home, but it just kind of like, I don't know, got to me a little bit this weekend. Okay. So let's get into some of the other news. I wanted to bring in something a little bit more stock related. As you guys know that I am more into the traditional finance side of things. And I thought this was newsworthy even for DCTV fans. So Bob Iger, about 18 months ago, stepped down as the CEO of Disney, and now he's back, baby. He has now moved back in. So Bob Iger's on the left, if you don't recognize him. Bob Chapek, who was the CEO of Disney, is on your right. And this is actually a huge development because Disney is now up around 10% here pre-market. And, it's just one of those, it's like a Michael Jordan moment. You retire, and then you realize that you want to come back. I'm curious to see how this actually shakes out, and I really don't understand why this actually took place. Bob Iger is going to replace him and replace him being Bob Chapek. And according to the company, Iger will serve as CEO for 2 years with a mandate from the board to set the strategic direction for renewed growth and to work closely with the board in developing a successor to lead the company at the completion of his term. Here's my thing about the whole Disney situation. Bob Chapek was given Disney in the middle of a pandemic and really wasn't given a fair shake, in my opinion. And then Iger just comes right back in after being on the board of directors and says, you know what, I'm just going to take it back over because we're not growing like we need to, which is very interesting because if you look at Disney Plus is still growing like crazy. Yeah,
but Disney Plus had a loss of revenue of what, 1.7 billion this year, right? So they've seen growth, right? But remember the Disney family of companies, so it's not just Disney Plus, it's not just the parks, it's also ESPN, ABC, right? Everything all together. So while the parks have been doing great post-pandemic, the studio side of it is losing money.
Well, I don't know if that's necessarily I don't disagree with you. I just don't know if that's necessarily an indictment on Chapek, right? Because
I'm not saying it's an indictment for sure.
Because almost all of the streaming services, including Netflix right now, are kind of in this crunch where they're in a land grab for market share, and they're all spending shit tons of money on content. And so I think that I just don't know how Bob Iger is going to be able to change that. I could be wrong, but yeah, it seems to be kind of what's going on with them. But I don't know. The parks have been really tough just because, and that was before the pandemic, the parks was the number one revenue driver. And it's probably still going to be the number one revenue driver. Bob Chapek was, working with one hand tied behind his back. The Chinese shut down their parks, right? Even just as recently as this past quarter. And so it's just been really tough. I just feel like maybe Chapek didn't get a good shake at it. But it is what it is.
What were your thoughts with Chapek, Brad? Like, what improvement do you feel occurred, and what opportunity did he get a fair deal on? Like, where do you see that the timing isn't right?
Mm-hmm. And should he have gone more woke is the other question.
Yes, I think that could have had something to do with it. But no, it's a good question, Jaime. So Chapek actually was doing a really good job at growing the digital side of their business, right? When Netflix was losing subscribers, Disney Plus and their streaming services were continuing to grow. And if you combine Disney Plus along with Hulu and ESPN Plus, they are actually now bigger than Netflix is. And this is within less than 2 years that streaming service has grown that much. So to me, I think that and that's where Chapek lived before he became CEO too. So it's not really too much of a surprise that he was able to grow that much. I think that the areas where he just wasn't given a fair shake on was the attractions and the park side, just because there were so many restrictions and it was so complex with, on a global scale. that I don't know if he was even given enough time to really kind of see his full potential on that side of things.
Yeah.
So,
Yeah, it's interesting.
Yeah. Like I said, I think that I'm not going to sit here and say he did a phenomenal job, but the other side of it is that there's environmental issues that weren't entirely in his control either.
Mm-hmm. Well,
So,
I'm sure you'll speak at some point, his thoughts. Hopefully he'll share them.
yeah, absolutely. If you guys want to see more of that, you guys want to get more of the story, be sure to tune in to me over at Own the Chaos. If you guys want to check that out, I'll be live at 3:45 p.m. Eastern time today. We'll be talking about that some more. Moving on, I wanted to talk a little bit about Mr. Michael Saylor. So, and this is kind of where I want you guys to really kind of take this and run with it, because there has been some really big drop-offs in Grayscale and in MicroStrategy's stock in particular. This has been a really interesting story as far as bonds are concerned. So bonds issued by Coinbase as well as MicroStrategy have fallen off. Coinbase's bonds that is due in 2031 has dropped 15% this month to it's 50 cents to the dollar. That's according to Morningstar. MicroStrategy's business. If you guys aren't familiar, is a business intelligence company, and Bitcoin holder have taken a similar beating. On Friday, the yield was the 2028 notes that are down 13.5% to a record low of 72.5 cents to the dollar. MicroStrategy holds about 130,000 Bitcoin, approximately 2.08 billion on their balance sheet. The company's bonds carry a premium of around 1,000 basis points or 10 percentage points to the U.S. 10-year Treasury note yield. This, to me, is obviously more of that contagion of just transferring into or rippling into a bunch of other areas. And we've seen Celsius, 3AC, Voyager, BlockFi, obviously FTX go to the wayside. Is there trouble ahead for these companies as well because of what we're seeing in crypto in general? And is there an insolvency issue across the board?
If they do not have the reserves to carry them through, yes, there will be big problems. Because if they used any leverage, they went beyond one-to-one relationship with their assets held, margin calls are inevitable. So that's the big question, is how deep does the rabbit hole go? FTX, come on. Binance, CZ just tweeting, guys, I don't agree with the direction SBF is going. I'm getting rid of FTT, which is in my possession. Getting rid of it. That's it. He didn't speak anything like I'm going to go bury the industry. Nothing. I'm just going to get rid of it. And all of a sudden you start seeing all these tweets, and within 3 days, this dude was bankrupt.
Well, that's the issue, though. It's about what happens when people get scared and run for the hills. They take their money and run. So it's not necessarily about the underlying asset. In this case, you're talking about FTX, and clearly that was an issue in and of itself, which is why it fell apart. But even on things that are rock solid, which I have arguments why I don't think Grayscale is insolvent. And even if they are not insolvent, they are in fact good. It's sentiment. It's user sentiment. If they start unwinding things, or if the right Twitter feed goes out and spreads FUD across the industry, well, the market sentiment is everybody's going to take their assets, their tokens, whatever, take a loss on them and run for the hills, and that's essentially a bank run.
Absolutely,
yeah, agreed.
And just in time said it perfectly. If they show proof of reserves, I sure hope we good. And that's the key. That's
the scary part, though. They're not.
And they're saying it's for security reasons. We can't show it.
Stay Safu.
and then they say that Coinbase has a good stash of theirs besides Bitcoin, a few others, and yet they won't show the wallet address. So for anyone that's green in crypto, what is this proof of reserves? There's crypto, wherever you store it, a wallet is literally a hash where your tokens are stored, and only you own the key to release or to send it off. So proof of reserves literally is showing the hash, the address, and it's safe. There's no way to hack it, but it shows, hey, this is how much I have. And with that, people can do their math. Okay, how much leverage do they have? Where's their debt? And here's their margin call level if they over leveraged or borrowed against it. And that's the danger at this moment is, okay, why aren't they showing it? I mean, Binance and so many others, so many other exchanges are showing the proof of reserves. So now everyone knows, okay, this is what they can sustain in a market downturn. But GBDC, that's a critical one because that one, 401ks have it. It's been a darling of the industry. In full transparency, I own GBDC in part of my 401k. So, and that's one of the conversations we're going to have with TAMP right now that we're speaking before we're coming online is, what does this mean and what issues are there down the road? Go ahead.
I mean, this is kind of what we've been preaching since the FTX drama, came to light, is just hang on and let's see what dominoes fall from this. Grayscale, if Grayscale fails, Coinbase fails. If Coinbase fails, Grayscale fails. They're too intertwined with each other for one to be okay and one not. So let's just get that. So that's my problem with the poll today is like the first three answers were all the same.
Yeah.
So this would be so detrimental to the crypto industry if these fell. I mean, Don would win our $10,000 Bitcoin price bet hand over fist if something like this happens. And again, I just mentioned user sentiment. And so that is always on the table. If people even get the sniff that something is wrong, they can hit the hills. But there's a couple reasons why that I think we just need to hang tight. Okay, like we've been saying, and see how this shakes out. I think that Grayscale either making it through this proof of reserves or folding to the user reserves and going under will mark the end of this bear market. That is my prediction. I think this is the last domino, whether this domino falls due to illicit practice or whether this domino stands, like I personally believe it will. I think once we get through this, it'll be okay. The thing is, though, is this is not a quick thing, especially if Grayscale starts unwinding assets. It's not going to be quick. It's going to take some time. And I think projecting out to the next halving of Bitcoin, which is March of next year, 2022, you're looking at what, approximately 24? Yeah, 24. You're looking at max pain of 18 months. I do not think it will last that long. I think we'll be out of if Grayscale stands, I think we'll be out of the bear market in a matter of months. I'm thinking end of Q1 next year. If Grayscale starts unwinding and ultimately fails, which I personally do not think will happen, but if it does, because we don't know what's really under the covers, has been shown multiple times over. If it fails, then it's going to bring pain for a solid 12 months. Solid 12 months in the industry.
I find it interesting. One of the things that you had stated in there that stuck out to me was that you thought that this was going to be the last domino to fall to kind of indicate a bottom. I was actually thinking that the second largest crypto exchange in the world falling would have been that. So you think that it could go even deeper than that?
I do, because FTX was a scam and it was a rug pull.
Yes.
And that's why.
Financial rug pull.
Yeah. Grayscale and Coinbase and the likes have been industry players for a very long time. And if they show the same sort of fraudulent books that FTX had, or even just a percentage of that, I think that would be the biggest disappointment ever. FTX was a new player who slammed into the industry as if they had all the answers, who came in like a white knight thinking they were going to fix DeFi. And in fact, they were a fraud.
And it was young, dumb money.
Yeah, exactly. It was a whole bunch of noobs. Grayscale and Coinbase are not the same in that regard.
Mhm.
Does that mean that they are immune from doing illicit, fraudulent things under the hood? No, it does not. But I don't think that Grayscale / Coinbase is anything near the likes of FTX. I think those are two completely different things all the way around. And if I had to put my money in one, it's obviously going to be the Grayscale and Coinbases of the world, not the FTX, because FTX wasn't proven. They just came in like a titan,
Promising.
and acted like they ruled everything. And for a second, they had that sentiment that they did, but we all saw that it was just a massive Trojan horse. It was just a bunch of BS.
Yeah, they hit the marketing hard, and they hit normies who had no idea what crypto was, and that's where they got such a big hook in the fish's mouth. They literally got like Miami Heat involved in it. Guys like Tom Brady. So people who have no idea what's happening in technology and no idea what's happening in the crypto space, they're like, oh, okay, well, I saw my buddy make some money, so hell yeah, I'm gonna put some money here. And like that was kind of like the market they were shooting for. And unfortunately, those people did get taken for a ride. But if you are following best practices in crypto, you are going to be holding your private keys. You're not worried about these centralized exchanges. And one of the biggest things about these centralized exchanges that does affect the real crypto space, like the actual people developing and doing code, is it changes the amount of money they have available to give them runway to make great tools and make integrations. And if there's a lot of FUD happening, fear, uncertainty, and doubt, you'll end up seeing a lot of people who would normally be adopting these tools kind of disappear, because you only have developers in the space and people who are really hardcore investing in the space long term still here. So like that's how this affects like the big picture. But you can protect yourself from a huge amount of this by just holding your keys, dude. Like we say this every single stream, and it's worth repeating every single stream. Get a freaking Trezor or a Ledger. Go to their exact website, ledger.com, and get one directly from them, a Ledger Nano S Plus or something, and put all your cryptocurrency on that. Don't leave it on the exchange unless you're actively trading and willing to lose it. Don't get played.
And that's something that does need to be clarified. If you just hold Bitcoin right now in your own private wallet, absolutely none of this affects you whatsoever. Right. Again, like we keep saying this, like this is a decentralized finance or a DeFi or a crypto issue. What's going on right now? Bitcoin's name and name alone is involved in all this. Bitcoin itself as an asset is 100% safe. It is fine. It is not going anywhere. The only thing that it is dealing with right now because of DeFi and the crypto world is price fluctuations.
Right.
That is what is hitting Bitcoin right now. It is not about it being safe, or if you have it in a wallet with your own private keys, you are fine. You just have to weather this storm. And the best thing you can do right now is either continue to buy it up at cheaper prices or just ignore it. Just shut all crypto news as best you can. Go do something else for a few months and come back and say, oh yeah, everything's the same. I mean, you just need to wake up, from the bad dream. Let the stuff pass, but you are fine. Again, this is just like FTX being a fraudulent centralized exchange that did dive in the crypto space, purporting itself as a crypto or a DeFi agent. It is not. It is a wolf in sheep clothing. And that's kind of what's going on with all of DeFi and crypto into Bitcoin. So Bitcoin's over here looking like, y'all stop, get my name out of your mouth. You're giving people who don't understand me, a bad rap. And I understand that. I get where the maxis right now, the Bitcoin maxis are screaming, we told you so, we told you so. And I understand, but I'm also of the space where I think they can play together, and I'm waiting for the day that they do safely play together, meaning crypto, DeFi, and Bitcoin.
This whole situation is validating Bitcoin in terms of what people are asking is, how much Bitcoin do you really have for me to feel safe? So if they don't have the Bitcoin, they say, and so if it's worthless, why are they so concerned about, do they have enough Bitcoin instead of US dollars, for example? It's like,
right. But
one of the red flags for me is that Grayscale doesn't appear to be very transparent about this though either.
Fair. Good. And I want to bounce back and forth with Jaime on this one.
Mhm.
because that's the one thing that has happened thus far. Grayscale was basically asked, hey, look, if you're so solvent, then just show us your reserves. So
Right.
they came out with a Twitter thread. It was a long Twitter thread, and they basically said a couple things of note. A, that they hold individual assets in individual LLCs. So it's not just one big pile of crypto. It's individually held, is what they said. But then they said, well, we also have a one-to-one backing of all Bitcoin, but we can't show you that wallet because it's a security issue. That part right there raised a little bit of a red flag for me, because as far as I understand, that wallet is a publicly held address. It's not like it holds private keys that would actually be a true security risk. So if you truly have the amount of Bitcoin held that is also outstanding, then just show it. I think they're maybe worried that if they show it, the amount of Bitcoin held does not exactly equal the amount of Bitcoin outstanding. And then a sentiment of run for the hills and everybody pulling their money and getting out is real. Now you just literally triggered it. So that is concerning. But on the other hand, okay, Grayscale is in the middle of a lawsuit against the SEC for their spot ETF. And
Yes.
I will make some arguments that reasoning alone is why I actually do believe that they are far more solvent than maybe they are trying to purport right now. So I really do want to go back and forth, because basically Grayscale has petitioned the SEC for a spot ETF multiple times. I think it's like 3 or 4 times now, and have been turned down, seemingly for no good reason, because Grayscale says, hey, we gave you everything that you need. Why do you keep turning us down? And it's happened so many times that on the last rejection that Grayscale received from the SEC, it was, I think, the end of summer, I believe.
Yep.
The last time they were rejected, Grayscale got pissed and took the SEC to court, basically for an unfair rejection. They wanted to show the courts in the world there is no reason outside of a prejudice against the cryptocurrency space that we get rejected for a spot ETF. Okay. So they're literally in the middle of this lawsuit. If Grayscale, before this huge crash, got to these levels, if Grayscale took the SEC to court without the proper holdings in custody, would that not be the stupidest business decision in all the history of business, crypto included? I mean, you do not take somebody to court screaming and yelling, as they should. I mean, they got shafted. They're screaming and yelling, unfair practices, unfair rejection. I'm taking you to court because it's so blatantly unfair, and then not hold what they say they hold.
Absolutely.
To me, that's a really, really big deal. With that, I'll let you go, Jaime, for a minute, because I got more.
No. But see, I'm with you on that. And imagine your GBTC under Barry Silbert, his digital global, company, one of the largest in the world, who's one of the largest issues loans, and their crown jewel is GBTC, which is an on-ramp for 401ks, retirement funds, and anyone who wants to buy into Bitcoin but not are too scared to go buy the asset itself.
Buying into the sentiment of Bitcoin.
Yes, exactly. So now imagine they've been working, and all of us that have been in crypto for a while have been seeing them pushing for ETF, for spot, trying to convert it so there is a one-to-one relationship with Bitcoin. And yet they're fighting this. We saw it in the last bull run, and at the top they were trying to get it and they were denied. Now you get this sexy FTX coming in, and yes, you're approved. Let's go. You can do whatever the hell you want.
We'll lick your boots.
Everything. And then they even have their own calls with the SEC. And then the SEC threatens others like Library and so many other protocols, like do not speak of our process. And yet FTX does all this, and it turns out to be a gigantic scam. So you can
With a
only
sex
imagine,
cult under it, by the way.
Yeah.
Yeah.
bro.
Literally a bunch of sweaty MIT nerds doing it in a pool. It's weird.
So disgusting.
But it's such a great point. Like, I mean,
Yeah.
because everybody's screaming about the risks of crypto and Gary Gensler being cozy with FTX and you know, the
Yeah.
current party in power getting all this money. If everybody's screaming about that right now, a spot ETF approval is a great way to show progress with protection right now.
Yes.
So if I'm Grayscale, that's my biggest thing I'm going at with regulators right now is you pick the wrong company. And not
Mhm.
only as you know, us as Grayscale, we're going after the SEC for denying our spot ETF. We'll go after you as well for backing the wrong company and not trying to do right by noobs and consumers in this space by giving us progress with protection in the spot ETF. I don't think you can scream either of those two arguments without having a bag that is one-to-one backed. You know, again, this is hard though, because I mean, if you look at the scroll, like I put the scroll down there, you can't trust in this place. You cannot trust. You have to verify it. We say it all the time. You know, code is law. You know, and these days, really, it's verify, don't trust. You know what I mean? I mean, it
Yes.
is.
Yes.
And so I understand that what we're saying is a little bit of a give and take here, and it's a little bit of an oxymoron. I understand that, but I still just I have to believe that you don't do things that much preceded this whole bear market without having your shit in order first. You don't
Absolutely.
take the SEC to court without having everything. Now, if Grayscale all of a sudden pulled out of their lawsuit against the SEC, that's a huge red flag for me.
Right.
Because to me, the only reason you pull out of that is because you know you can't support your argument now. But you're
Absolutely.
staying in that court argument because, again, you're trying to show this was an unfair rejection. So I'm going to put everything on the table and let a judge decide. Judge, the SEC's turned us down 3 times now. Here is everything we have. Here is all the spot ETFs that have been approved before us, having all the same info that we have right here. Why do we keep getting rejected?
Right.
And if they are in court doing that, then you know that to me that actually just upholds their reputation and what they're saying.
Absolutely.
Yeah, keep in mind too, like so Web 2 in general is a like centralized server infrastructure. You basically have all the data in a centralized place and you're saying, hey daddy, can I please have my data? And sometimes daddy says, you've been a good boy, here's your data. And that's how like in general though, that's how Web 2 functions, right? And so Web 3 is zero trust architecture. It is meant to be trustless systems. And so the idea is you are holding your data, so you are your own daddy. You don't ask permission. You do what you feel you want to do. And all the applications are simply doing calls. They basically have like a list of, hey, if someone asks for this, we won't resolve that address, right? So if Tamp insulted the data lord and said I look like Tim Pool, even though I like Tim Pool.
I didn't say that. I don't even know who Tim Pool is.
I'm giving an example. But like, if that's the case, it's like, well, I'm going to cancel her. Well, all I would have to do is say, well, I don't want. If you ask for her data, just don't give it. And that people are just going to say, that's fine. I just won't use your platform. I'll go to another platform that does resolve that address. No big deal. And so you see now we don't have a daddy in the middle, right?
Mm-hmm.
All we have is like applications facilitating people exposing their own data. So. No, I love Tim Pool. Trust me. He's a skater too, but yeah, go ahead.
I'm just like gonna keep going on this, and I want you guys to tell me if I'm crazy, but like
No.
Here's the other thing with this. And again, I just wish Grayscale would just come out with their reserves and just put it all to bed. But
yeah, like why not just shut them up?
Exactly.
Shut up the naysayers. Like, how hard is it?
I don't know. I think I just keep coming back to the spot ETF because I think Grayscale is trying their best to not unwind anything in their trust because, again, user sentiment, like we said, that'll be very, very scary. And even if they do have to do that, so I think right now having the ability to raise funds if there is somewhat of a bank run, so that way they can just pay anybody who wants to get out because they're scared regardless. I think having the funds to do that and pay those people right now at the price that Bitcoin and other crypto assets are at, being low, is going to be much more preferred by Grayscale right now. Can they unwind their assets and pay or give the people their assets? Yes, they can. But again, think about what that does to the market that is already down. An unwinding of Grayscale assets in their trust is going to trigger another scare. It will. That doesn't mean that Grayscale is illiquid if they do that. It just is it's an image that isn't good. So what I think they're doing right now, because there's all kind of reports that they're trying to raise about $1 billion right now, and they're kind of running into some problems here and there. Yeah. But if they can raise the money to pay out people what they want, as far as what their Bitcoin is worth, because with Grayscale, it's not just like, hey, give me my Bitcoin, I want it back, and then they just give them a 1-to-1 Bitcoin. It's a regulated thing. If you want your Bitcoin right now, then you literally have to basically buy it back from Grayscale at the price it is right now. So if you want to take a loss, you essentially buy it back from them. So Grayscale would much rather pay you cash for that and keep the asset wound up in their trust. I guarantee you that is what they prefer. Yes. They don't want to unwind because we're in a bear market. That's why they use those assets to get loans and whatnot.
Sure.
So they want to hold the actual asset. I'll just give you fiat if you're scared and want to run for the hills, right? Mm-hmm. So I think that they're raising money to do that in case there is another scare, in case there is another domino from the FTX collapse and in the bear market that we're in general. So they're raising money just to pay the scared money is what they're doing, and to pay that in fiat. Because I think right now, even the mere mention of a spot ETF would skyrocket purchases and like basically close a big gap there, for redemptions and purchases. So I think Grayscale is waiting till the very, very, very last second. I mean, it's like getting pushed off of a cliff where they're getting pushed and pushed further toward the cliff, but they do not want to start unraveling assets that they hold for users until they're about to fall off. So they're looking for funds just to pay out scared money right now. And I mean, like, there's so many funds under the Grayscale umbrella. We talked about they're each individually held in their own LLCs. If Grayscale starts unwinding, I don't think they're going to unwind Bitcoin first. I mean, correct. I know I wouldn't. Last. They hold Bitcoin Cash. They hold Litecoin. They hold Ethereum Classic. They hold XLM, right? Like they hold all these things. If we start seeing them unwind, I think it's going to be with those things first. Yes. They don't want to unwind, period. Again, user sentiment.
Sell bronze, sell silver.
Calling it Bcash.
Yeah, Yeah. So if we start seeing them actually unwind and they start unwinding anything other than Bitcoin, we know exactly what they're doing. They're just paying the scared money. Now, maybe they don't have liquidity to hold user assets and pay out if said users come looking for their assets, because they want to pay, again, users that want to run. Fine, run. I'll give you fiat, but I'm holding your Bitcoin. They don't want to unwind the actual assets.
Right. Because they can make loans on loans on loans on loans. They can get like huge blocks of super, super cheap loans.
Exactly.
Because that's the type of money they're rolling.
Yeah.
Yes. And as soon as we're a little bit further out of this current bear market, they will be able to use other people's money in the form of loans, which is always going to be preferred with businesses versus having to, it's like getting a loan against your house, just a home equity loan versus actually selling off a chunk of like a room for an Airbnb, or you sell a room in your house to a business because you need more money. Which one is preferred? Like, I don't want somebody moving in and acting like they own the place. I would rather just get a home loan and do what I have to do with the bank's money and then pay it back when we're out of this shit market.
Of course. Yeah.
Yep.
Right. And that's kind of what I'm seeing. I mean,
and
I agree with
you. The challenge at this moment that what everyone's watching is because Barry Silbert himself said, I need $1 billion to keep Genesis. So one of the companies, a sister company to GBTC, so they can pay out. So a lot of people are like, oh shit, if Genesis goes down and like Winklevi or like
Winklevoss.
Winkelvoss.
No,
Winklevoss.
Winkelvi. It's two.
Oh, Winkelvoss, yeah.
Yeah, it's two.
Oh, yeah.
So
I didn't realize that was the plural way of saying that.
Oh, really? Yeah, you'll see it all over Twitter. Instead of the Winklevoss twins, they say the Winklevi.
That's hilarious.
So,
Wunderbar. Yes.
so that's where they're even like, no, bro, I'm not. You're doing the loans if you don't have the liquidity, because it's truly a bank run. What's happening at this moment? And whenever you do fractional reserves and you combine it with a bank run, disaster is always spelled out. Look at FTX. Within a week, he went from 16 billion worth to nothing. So that's where we're everyone's watching this week is, okay, they put this week as the deadline to get the $1 billion to stay afloat. If this unravels, and that's what we meant by the next domino, if they do not get funding, now everyone's looking at Barry Silbert's entire organization and are like, shit, if Genesis is going to take a dump, what's going to happen with GBTC?
Yeah.
In the meantime, GBTC is saying, for security, we won't show you the proof of reserves.
Yeah,
You
I'm
know.
sure it's regulatory inside their organization. It's like their compliance officers like,
Yes.
I'm sorry, I'm going to be on vacation. So when I come back, we can look at like I deal with that all the time. But like, I did want to cover one thing too, though. Keep in mind, if you aren't privy to this, big businesses will get really, really big loans, like big loans, and they'll get them for cheap because they have so much confidence they can pay them back. And what they'll do is they'll create a whole bunch of financial products lending out. So like, let's say they get, $3 billion of loans at like 3% or something. They'll then make a whole bunch of loans at like 7% and 8% and 9% based on the confidence that they'll get paid back in a certain time interval. And then they'll cop all that margin between 3 and 8% or what have you, plus interest on top of if people aren't paying consistently. Right. And so like that's the type of like money games that are behind the scene with things like Grayscale. It's not as straightforward as Bitcoin seems to be. And what they're trying to do is basically create abstractions of value, to use a Peterin word. They're using abstractions of value though on these loans to put a Bitcoin sticker on them and have people feel like they're actually investing in Bitcoin. When they don't hold the private keys, they're not investing in Bitcoin. They're investing in the market sentiment of Bitcoin to help grow their traditional investing. That's not wrong, but please don't call it Bitcoin. It's a different idea entirely. You're not holding your keys. The fundamental self-custody, principle is not being observed. And so these are not the same. Do not confuse these as being the same, but this does impact the regulation that will come that will affect people who are holding their private keys. And so that's why this is relevant for anyone who's wondering if this is even crypto related. It is, because it affects people who hold crypto, because there's people who are bad actors or are different than, not of the same kind as crypto heads, involved in this whole space, changing the way new people come into the space and understand it.
Right. And that's also why I say like it could be a strategic reason as to why Grayscale is not showing their proof of reserves. Brandon said it beautifully. If it's just you and I, and we're dealing with a couple $1,000s, even 5 figures, 6 figures, then just show what you got. Right. But business is done on massive, massive scale. So Grayscale does not want to unwind their assets when the mere mention of a spot ETF, which they have moving in the courts right now, would skyrocket the price. Now Grayscale can easily get loans on what they are and what they have and not have to unwind a single thing, right? So to me, it makes all the sense in the world as to why they're delaying showing, well, I'll just unravel the assets. It doesn't mean I like it. It doesn't mean that it's the right thing, to do for DeFi and Bitcoin and all this. I'm just saying from a business perspective, this is kind of how I see it. Now, that being said, all of this assumes that there's legality in these business practices. And that's where the frustration comes from, because we've seen with the 3ACs and the FTX, we can't bet or trust on legality. But if any entity is going to have an adult in the room in this sort of space, it's going to right now be either Grayscale / Coinbase and or Binance. They are showing right now that they are the adults around here. So,
Right.
you know, again, you can't, that's why the scroll thing says like, we can't trust it. But if you just take a step back and try to look at it from a business perspective, it seems to make sense to me.
So what would you do in this situation? Like, Jaime, you're an investor in Grayscale. Like, given what we're looking at here, you know, can they be trusted? In my opinion, I don't think they can. And I think that you, of course, probably, I'm speaking for you, of course, but like what maybe are raising some questions, maybe have some concerns, or do you not? Are you just, you know what? I think that this is more of a legality type thing, or what have you? Like, are you just doing nothing? Do you have like contingencies in place, considering that this is in your 401k?
Are
Like,
you SAFU?
so yeah. So the reason why I'm asking is because I'm sure that there are other people in this situation. So I would love to get your thoughts on that.
Of course. And as a matter of fact, one of our community members posted that question. Pistro is his handle. Yeah. And he was asking, well, if Bitcoin goes down, will GBTC go down with it? So in my case, because I invested in GBTC a while back, and why did I do it back then is because, one, I'm doing the dollar cost average and investing in the asset itself. But then here I have my 401k where I'm like, you know what? I'd like to get exposure. And like Data Lord clearly stated, it's the tracking of it. I'm not buying the asset itself, but GBTC was the closest thing I could put into the 401k.
Without losing your ass on taxes.
Precisely.
Exactly.
This is a bad tax law problem, really.
Yes.
Yep. So
Exactly.
basically, if
Bottom
he
line.
pulls the money out to hold Bitcoin like Jaime prefers, he's going to take a massive tax hit because he's pulling from his retirement early. But he can keep all of his retirement fiat money if he just puts it into Grayscale, which claims to do the same thing.
Absolutely.
So, I mean,
and remember,
the lesser of two evils.
Correct. And the 401k or retirement fund is a long-term play, not just the taxes, but it's also long-term. So that's the way I look at it. And I expect the ups and the downs and everything going sideways. So to me, of course, the whole trigger or the whole danger, the risk here is, one, it's already down. And in my case, because I'm looking at it for the long term, I'm not worried about it. If it liquidates, well, hell yeah, I'm concerned about that, because now that's a bigger macro problem we're looking at. Because
if I were you, Jaime, I mean, I don't have money in Grayscale. So, you know, it's easy for me to say something, but right now I would just hang tight. If I had money in Grayscale, I would hold on right now. Now, we all know that something could come out that could switch that sentiment in a second. We know that.
Yes.
But until Grayscale starts unwinding Bitcoin, hang tight, because if they're just slightly crunched for money, wanting to hold the assets and pay out people who want to leave, they'll start unwinding things that are not Bitcoin first.
Absolutely. And that's the way I see it, because remember, I was even calling for Bitcoin coming down to the 13.8 down to $9,800, which means that GBTC was going to do the same thing.
Yep.
Yeah,
I would just hang tight there.
Yeah. Oh yeah, I am Temp, by the way. And that's great advice, sage advice you give to everyone is, when you don't know, just stand back and watch.
So this is exactly what I was going to ask. And I think that, and Donna asked that question, said, why would you have money in Grayscale anyway? Serious question.
That's what we just said.
Okay, fair.
So tell us, Brent.
But in your 401k, you can sell that. You can still sell the Grayscale and go buy something else, such as an Apple, that would be a more secure asset. At least right now, that's very transparent, without taking any kind of tax cut, because you're not actually pulling that money out, right? I understand that a lot of it has to do with your convictions in Bitcoin, but because Grayscale isn't Bitcoin, doesn't it pose a greater risk to hold on to that, because there is some transparency that hasn't come to light? And obviously, we've already made those arguments as to potentially why, but like, if I'm an investor and I already own Bitcoin, such as you do, why wouldn't I just reallocate for now until Grayscale got their shit together, until we figured this out. I guess that would probably, because Don's asking it, and this was something that I was about to ask. I think there's a lot of other traditional investors that may have the same question.
Absolutely. So, like you said, allocation. So, of course, I didn't put the entire fucking 401k.
All in, baby.
Yeah, exactly. I'm not one of those maniacs.
Gambler,
But in terms of, because it's a long-term play, in it, and because I could not buy spot Bitcoin, imagine this, if SEC would not have said no in summer about ETF converting GBTs, guess what my 401k would have now? Exchange traded fund on Bitcoin, closer to the asset itself. So it was a gamble that I mean, everything's a gamble in investment. But I still see it coming through. Once all this, they drain the swamp. I know it's a political term, but truly it's once they start draining this SEC and regulation swamp.
Sure.
Bitcoin is Bitcoin, regardless, the hardest asset on the planet. And if there's the means to get my 401k exposed to it, that was the best means at the time I made the decision. If it flips, they drain the swamp and they're like, all right, FTX, yeah, we fucked up. Yeah, we shouldn't have looked at the sexiest girl and given the money to her. We should have looked at the ugly one that does all the math and does all the effort, right? In an illustrative way. Then at that point, I know my investment is great. But moving it around in that instance, yes, just like I stepped off Bitcoin at around 45, I could have done the same with GBTC. In this case, because I was looking at the long term, like a hodl position, I didn't want to bother, because then I don't want to be thinking, okay, where's the bottom? How am I going to test the bottom? Especially when there's a premium and a discount attached to GBTC pricing. So imagine when things flip now to the bull. Right now, it's at a 50% discount. The asset GBTC token, not token, but the asset itself, added 50% below. The moment we flip and there's regulation and there's clarity, and if it's still standing, there's going to be a premium immediately. I promise you, it'll go up to 25 above the valuation of Bitcoin.
Even if there's just a whisper of a spot ETF, it doesn't even have to actually do it. If it just whisper, the price is going to skyrocket faster than your Apples, everything else. So I think Don makes a good point. Like, can you hedge it? Yes. Like, put it into an Apple or something like we gave an example of. Sure you can, but I personally can't. Like I'd have to call up my guy and say, hey, do this, because I don't know charts. I don't know trading. I don't know what I have to do. I have to listen to him say all this stuff. Are
you sure?
Some traders, I think some traders underestimate how scary charts are for people who don't know what they're doing. And it's easy for you to say, well, you just don't know, it's easy. It's easy.
That's not what I wasn't talking about trading. I'm just talking, you can just dollar cost average into Apple just like you do with your Bitcoin. Like,
no, I know, but
chart
but the question was, why not move your GBTC into something else? Apple, given the example, into an Apple to just de-risk it until all this blows over.
You can always go to Don Fran's show. He covers how to do that.
if all I did all day, every day was trade this stuff and understand the tax implications and know what all it means, then I probably would. But the thing is, unless you know a guy like Don that can do that for you, the average person is sitting here saying, well, I guess I'll just hold it because I don't know what else to do with it, or why sell it at such a huge loss? Apple's down to whatever it is, there's all these reasons. And I think, again, it comes back to sentiment. Sentiment does not, it's usually not a logical thing. So I'm sure if Don was here, he could poke holes in this argument all day long. And logically and black and white, he's correct. But the sentiment is, I don't know how, it's too much. I don't know what I'm doing. I'll just write it out, and right now I still would. I don't think is there red flags? Yes, there are red flags we need to watch. And if Grayscale falls, I promise you, we will be online like that, regardless.
Oh yeah.
Full-time coverage.
You know,
yeah.
like
I'll be
saying,
crying, guys. I should've-"
My butt
did
hurts
you
so
how to
bad.
prepare for this, that, and the other? And right now, I think the best way to prepare for it is just, watch the news, just kind of pay attention to it if you're invested in it that way. If all you have is Bitcoin in a ledger, you don't
Yeah.
you don't need
Who
to you don't
cares?
need to worry about any of this. You can go do whatever the hell you want and not have to worry. But if you possibly could be directly affected, then you do need to stay on top of it. You do need to have somewhat of a plan. But that's also an oxymoron in and of itself, because when it collapses, you're screwed. There's probably not a whole lot you can do. But because Grayscale is registered and a US company and everything else, there's going to be tax implications if you lose your ass. So, unlike FTX, that will help you, like it's a small consolidation, but at least there's protections there.
Yeah, and they can print non-backed USD fund bucks for you to pay it off.
They can. Yeah. I hope they don't.
And by the way, everyone who's watching, this is not financial advice. I was asked the question directly.
We're all stupid nerds. It's
I'm
fine.
I'm invested in there. So
For sure.
those are the odds. And this is for everyone watching, Brad, that I'm mentioning this is I see the odds are still in my favor for the long run, as long as they do not turn out to be an FTX,
Stay solvent.
which what Tamp explained, like I love how they've described you, Tamp explained it.
You got a
is
term.
it's going to take massive balls for GBTC to sue the SEC on a big lie.
Right.
Like, what are you, suicidal? No, you don't want to. So to me, it gives me faith that the odds are in my favor still. Ultimately, in my case, like Tim also has explained, and I agree with her, when you don't know what's going to be the outcome, hold. Just not hold,
Hang
but
tight.
do nothing. Just hang tight. And in this case, it's right now it's in the price position where would it even make sense to flip it to something else? Then regulation comes where it will become an ETF. Now it just lost that little edge in premiums that would come with that announcement. So I decided to hold in my case. But to be clear, it can go to zero too, if it's all a lie. So I want that to be clear to everyone.
Yeah.
Absolutely. This is a great show, guys. A great conversation. I can't believe we're well past 10 o'clock now. It's just been just a wealth of information. We're going to clip this up and put this out too, guys. If you feel like you missed something, there was a ton that we went over. So don't be afraid if you did miss out, make sure that you're subscribing, hitting that like button, as well as that notification bell. We'll get out some more of the highlights of today's show, as there are many of them. Before we let you guys go, though, make sure you check out the Discord link in the description below. Would love to have you guys continue this conversation with us in our free Discord over at our DCTV chat there. And and let's get into birthdays as well before we head on out. So Goldie Hawn today is 76 years old.
Love her. Overboard.
Yeah, she's amazing. Yeah.
Michael Strahan is 50.
I miss the Gap. I used to have a Gap. I miss it.
Ken Griffey Jr. is 52. Troy Aikman is 55.
Nice.
And let's not forget about Victoria Paris. Rest in peace. She would have been 62 today. She was a star of Fast Cars and Fast Women, Victoria's Secret, Best of Butt Slammers, Ready, Willing, and Anal, and finally Beaver Juice. Guys, thanks so much for tuning in. We certainly appreciate it. You guys are the best. As always, keep calm and huddle on.
Take care.